Asset equal to liability plus equity. What is asset? Asset is what company owns. What is liability? Liability means what company owes to outside parties. And equity means what company owes to its owners. Let us take some examples of asset. Cash, accounts receivable, inventory, property, plant and equipment, land and buildings, investments and goodwill. And some liabilities is accounts payable, loans, wages payable and taxes. And for equity, equity amount and returned earnings. Let us take some illustrations to understand this much deeper. A firm's initial investment amount is 130,000, out of which 90,000 is loaned from the bank and 40,000 is contributed by the owner. So the entry will be increment of 130,000 in cash in the asset side and 90,000 loans in the liability side and 40,000 in equity side. Just check the equation. Asset equal to liability plus equity. It is correct. And next illustration. And the firm purchased machinery that cost 50,000, 20,000 paid in cash and 30,000 through a bank loan. There is a change in asset side. Cash reduced 20,000 and property, plant and equipment is increased by 50,000. And there is an increment in loans and there is no change in equity. The equation still same. It is asset equal to liability plus equity. And next illustration. The firm invested 50,000 in mutual fund and deposited 20,000 cash into bank and repaid the loan amount of 30,000 on bank loan. See the changes. Cash reduced and bank account increased. Property, plant and equipment is still the same, but the investment increased to 50,000. In the liability side, there is a reduction in 90,000 because we repaid some amount. And in equity side, there is no change. And still the equation is correct. Asset equal to liability plus equity.